We're now in September, and I'm back here with my favorite person and my favorite lender, Greg Anderson, and we're going to do this monthly moving forward, and we're going to give you a very quick update of what's going on with the interest rates, right? That's a big topic in today's market. I already sent out a video about what's going on in the housing market. So in this video, we're going to talk to Greg and have him share with us where the rates are today in early September. We all know they're high. So then in your professional opinion, without being able to tell the future, I'm curious, when do you think we'll get some relief? And then most importantly, given the reality of the market today, what do you think people out there in the market, whether they're selling or buying, what should they be doing? Should they wait? Should they pull the trigger? And just in general, what are your thoughts about how the mortgage interest rates affect the decisions people should be making today?
Yeah, well, it's everything right now, right? So to where rates are today, so it depends on what survey you look at, they're somewhere between 7.3, 7.1, but most of those surveys are including some sort of a fee to buy down that rate. So the reality is if you are not paying any points or something, you could actually be up around 7.5 right now. We just looked at the charts, right? So you have to go back to 2001 to be able to see where those charts and those readings came in that high. So 22 years it's been since we've seen rates this high. Well, what's happened to prices over those 22 years? I mean, that $100,000 house in 22 years ago is probably, $1 million now, right? So prices have gone up a lot. So interest rates are really impacting this market. Now, that being said, we have lower inventory than we've ever seen. Inventory is at historic lows. So we're seeing multiple offers on homes. It's not, the 10, 15 buyers on one home where it's getting bid up $100,000 or $200,000, but we are seeing multiple offers. So what that tells us is there's not enough supply for the demand. Other thing that I'm warning a lot of people about is if you look at how many people are being taken out of the buyer pool right now, because of these higher interest rates. They're not going away. They're not saying, I don't ever want to buy a home again, right? They want to buy a home as soon as they can. So I just got off the phone with a potential first-time buyer, and she's talking about, well, maybe I'll wait. And I said, here's the problem with that. So all these people that are forced to be on the sidelines because they just flat out don't qualify at these rates. As soon as those rates go to 6%, they will flood back into this market. And now we're not going to have the inventory coming on, especially in King County. I mean, King County has almost nowhere to build. That's why you're seeing the DADU and the condominiumizing of lots where people are, putting multiple units on one lot, whereas they can tear down an old house and get maybe 3 units out of it because there just isn't enough housing.
Right.
So you drop those rates, and now you have all these people rush in, and I don't really see the inventory all of a sudden spiking and catching up to where it needs to be.
Right.
So I'm telling people, if you're a buyer, you need to stay in the market. You need to keep your toe in the water as long as you can. We have tools. We have the temporary buy downs, the 2-1 buy downs, things that we can do to help you ease your way into the rates. And it's possible if you did some sort of a 2-year buy down like that you would never actually pay the going rate, because a lot of experts in the real estate and mortgage industry feel like we're going to see rates come down next year and into 2025. And so it's possible that if you bought a home now and knocked 2% off that rate, so let's say you started at 7.5 and knocked 2 off of that, so you start at 5.5, and then you refinance maybe next year or the year after at 6 or below, you might never, ever experience the actual, rate that you're fixed in at.
Well, there you have it, folks. And I think it's consistent to what we've been talking about. There is no doubt it's challenging out there. It's very expensive. And as Greg just talked about, a lot of people are simply getting priced out. But if and when, or not if, but when the rates come down, all of them will flood back to the market. So it just goes back to the same message we've had all along. If you find a home that's right for you and your family, and if you are able to make the payment today or using different products or buy downs, get yourself in a position to where you can actually afford it today it probably is the best time to buy because you will be able to refinance later. But if you have to wait, and again, I get that a lot of people have to wait, maybe they don't want to wait. It is what it is. But as Greg said, stay engaged, keep looking because there are deals out there to be had, and we see still people transacting all the time. So I hope you find this helpful. If you have questions about real estate, call me. If you have questions about interest rates or mortgage or getting a loan, you can still call me, but I'll send you to this guy, and we will catch you next month.